Hello everyone, this is Mulham from Mulham Trading. Today's video we're going to cover the Judas Swing. It's a setup, and this one is specifically for Forex. It can be used for indices but in a different way, but this backtesting was on Forex on the Euro USD, and at the end of the video you'll have full access to this Notion file. It's going to be all my backtesting for almost 6 months from September 2022 until February 2023. And it was in the Euro USD. And it's also going to contain the long blueprint and the short blueprint. You're going to have full access to all of those details and those stuff. So before that, we're going to go briefly into the setup. And then we're going to take 1 or 2 examples. And finally, we're going to talk a little bit about the backtesting process. And after that, you will have full access to this Notion file. So guys, remember, I spent 24 hours or maybe more than that just to backtest this for you. So if you appreciate this, don't forget to hit the like button and subscribe to the channel. It's all appreciated. Now let's dive into it. So first thing, this is a long setup. So first of all, we're going to mark our midnight. So this is midnight time. And then we're going to mark our 8:30 a.m. Remember, this is all New York time zone. So it's UTC -5. So between midnight and 8:30, we want price to be ranging, creating lows and high. So this is the high between midnight and 8:30, and this is the low. After 8:30, we want price to either sweep the high or sweep the low. And simply, if price sweep the high, this is going to be a short opportunity to us. If price sweeps the low, it's going to be a long opportunity to us. So in this example, price right here sweeps the low. After that, we want to see a change of character, which we see here, breaking this high. Price goes back to trade into fair value gap or order block. So make sure this change of character, it happens with the displacement, and it leaves the fair value gap. We enter from that fair value gap or from the order block, and we can target any liquidity zone. Make sure you close your trade before noon. If your setup happens before noon, like 11:45 or 11:30, I prefer not to enter. Now, in the short scenario, it's the same. We have our midnight time, 8:30, price makes a low, makes a high, and we can see that price sweeps the high after 8:30. Now, price makes a change of character or a market structure shift with the displacement and leaving some imbalances or fair value gaps. We enter on that fair value gap, targeting any liquidity available. As simple as this. So the example is going to be on the New Zealand dollar. I didn't take it personally, but I just saw it when I was looking at the pairs. So I'll say I'll go over it. Even though this is hindsight, it's going to be so helpful for you. So basically, this is midnight. This is 8:30. Now we have this low right here. And we have this high. And we're going to see how price reacts to those levels. So now I'll switch to the 1 minute. So 8:30 is already here. Price did not break or sweep the liquidity from that one. Okay, now it does. I'll wait for a change of character. My change of character for now is going to be right here. This is my change of character. Now price goes up more. Doesn't matter. Since price did not break this high, this is still my change of character. If price did this, break this high right here, and then go down, this is going to be my new change of character. So for now we see a change of character. So this is, for me, is a change of character. Now, where is our point of interest? You can see that we have this big displacement that needs to be filled, but we have this small order block here. This is a nice one. And we can see that it's close to this high where we're going to put our stop loss. So we can enter short just at the beginning. So basically, when I enter on a fair value gap, I go to the 50%. But when I have an auto block, I go at the beginning of the auto block. So basically, my entry is here, stop loss is just above this swing high. And then, since price take this liquidity, doesn't take this one, but price reacts from this auto block. So this is, for me now, is a valid auto block. So I'll just go until here. I don't think price will go immediately to take this low. This is 3.86 to 1, which is good. So we're gonna see. So price reacts from there. We got entered. So price reached the take profit, but if you had your take profit here, it's gonna stop you out. Just because this is a valid auto block. So you just have, so because this is a valid auto block, you have your take profit. Since it's a risky trade, always have your take profit at an auto block, not at the wick. Regarding backtesting, I used FX replay. It was so good. I could go up to 2016 in data, even on the 1 minute time frame, which I can never do in TradingView. Backtesting process, the most important advice that I can give anyone is to be honest with yourself. You can't just backtest and then see the future and then go back and apply or do whatever you like, apply your entry and then go in the future and see if it hits your take profit. If not, you go back and then you adjust your take profit. You can't do this. What you can do in backtesting is, if I can't see the future, if I'm here, for example, okay, so if I'm here and I have my setup here, I would go, if my setup says I should go short, I would go short. I would have my stop loss here, and then I would have my take profit, for example, here, and then I'll see what price does. If I got stopped out, that means this is a loser for me. So I should learn from it. That's it. If it hits my take profit, then, oh yeah, that was a good trade. That's it. You can't go and see the future and then go back. Be honest with yourself. Don't lose faith in your system, because you can't count on 5 days data, You need to do like 3 months, 4 months, 6 months, whatever. That level where you will be confident, more confident. So be honest with yourself. Always backtest and then enter without seeing the future. Follow your system. That's it. That's what I've been doing on this backtesting. Even you see sometimes I do, like, if you see the trade and you see where I entered, it's gonna seem stupid for you. But when you are in the market, you can't see those stuff. You just follow your system. Sometimes you can see some obvious stuff that you now see because you have the full chart. But when I was here, I can see all of this. That's where I needed to just stick to my system. That's it. Okay, now talking about the outcome of this setup, it's actually profitable because we got 44R. If you're risking 1%, that's going to be 44% for you. If you're risking 2%, that's going to be more than 80% on your account. It has a 55% winning rate, and over the 6 months of trading, we only had 40 setups. And those are the trades. So in September, we had 7 setup, October 8, November 7. So it's an average of 7 setups a month. So overall, I like the setup. I like the strategy. It's profitable over time, and it's very specific in time. So you really have a specific period of time. You go there, you look for your setup. If there is no setup, you walk away. That's it. One last thing before ending the video, I literally followed the simplest form of this setup. And I'm sure anyone at this point can identify a change of character and a fair value gap. This confirms that even following the simplest setup without adding confluences can make you profitable. And I'm pretty sure I can make this win rate much higher by 20-30% by adding other confluences. But I can make another video about it, going over how to improve this strategy. That's another video. If you like my content, then don't forget to hit the like button and subscribe to the channel. And that's it for today.